Hello, my name is Andrew Aziz, the author of How to Day Trade for a Living. Welcome to my channel.
Hey all, I hope that you're doing well. Let's take a look at the interesting price action of today and let's take a look at my trades. Today there were a lot of earnings and that's great. I'm looking for stocks that have the potential to, after the market open, have a lot of volatility to either move up or move down. Also, we use the daily chart and the pre-market price action to read the subtle clues and to create a bias either to the long side and the short side. So we're looking for stocks with volatility, a higher probability of volatility, so the earnings are great. Then we're looking to read the daily chart and the pre-market price action for a certain bias, and then we're gonna read the candles after the market open to find confirmation for our bias. So what stocks did I have on my watch list today? All of them, they had earnings, except AMD. AMD did not report earnings today, but all of the others, they did report earnings. One of them was BMY. And why did it caught my attention? You see on the daily chart, you see clearly the range. You see the top side and you see the bottom side. And the price action in the pre-market almost reached the low of the daily range. The low of the daily range was 47.58. And of course, if the price action breaks down it could trigger a lot of stop losses, it could attract shorts. And of course, there were earnings, so the price actually could make a lot of move. There was no support below. Actually, on the weekly chart, I noticed that it was also the lowest point of the last 3 years. So basically 36 months. So it was quite an important pivot point. In the pre-market, I noticed the price actually was weak. It gapped up, it bounced away from this 47.58 level, which was the low of the last couple of years. It came again down, it bounced off it, and then right before the market opened, it broke below it. You also see the lower high, so there's a lot of weakness visible. In the last range before the market opened, we see like price action forming a small range below this level. So at this point, everything looks weak. Then let's take a look here. You see the price action after the market opened. Market opened, price action coming up and coming down, breaking below the pre-market low after the confirmation of another rejection. So at this point, we broke down the very important daily pivot. Of course, we got the earnings. The pre-market was very weak. The pre-market closed actually at the low. And when the market opened, the price actually came up and broke down again, another rejection. There's a lot of confirmation of weakness. And I think that there was definitely a higher probability that in this case, there's definitely a higher probability that the price action will move further down. So I entered here for a trade within the first minutes and had my stop loss above. I exited my position a little bit prematurely at break even because I saw the double bottom, but that's very debatable. Later, I saw a triple bottom and a bull channel formed. Nothing really to worry about still because we were still below the pre-market low, below the moving averages, below the pivot, etc. But I was already out there. Here we formed like a 5-minute opening range. And at this point, the price action broke below it and it closed below the opening range. So at this point, we got a clear confirmation of a 5-minute opening range breakdown. You see the 5-minute opening range. This candle will be closing below it. And I think this is definitely an entry here because at this point, we're also making a new low below the confirmation after the opening range breakdown. We got opening range, we got the confirmed breakdown, and then we make another low. I think this was definitely an entry, but I missed this one. Price actually continues to move down. And we form here the first pullback. The first official pullback is the first time on the 1-minute chart, it makes a new high. At this point, we are rejecting again and we form a L1. This is the first time that we make a new low in the direction of the trend after an official pullback. This should be, in some circumstances, entry. I did not enter because these two candles, they closed almost at the high and this candle had a lot of volume. So I did not enter here for a L1. If this candle would have been a red candle or a candle with a rejection hammer, I would have 100% sure entered for the continuation move down with a very tight stop loss, and it would give a very good risk to reward. But that didn't happen. So we formed here a new range and we made a new low below the range, which is also the low of the day. So I entered here at my stop loss more or less here, and we moved further down, and I got here a very nice profit. And then you perhaps wonder, why did I take my profit there? Well, because that's the measured move. You see, this is the first move from the top to the low. Sorry for my bad drawing. And then we taking the same length from the top here further down, and more or less it came around the same. When I made my drawing is very ugly, but when I made the drawing, this was the area of the measured move. So there I got my profit. Let's take a look at the following setup. Following trade. This was Comcast. They also reported earnings. We see the pre-market price action on the daily chart, and we gap down also below the pivot point. We see the range, and we drop below it in the pre-market already. Pre-market looked very weak, and the price this was the level of the daily chart low, and in the pre-market we also fell below it. There was a very big opening range, so I thought this extended. I'm not going to trade it anymore. Price action came up again, and here we saw a rejection of this previous range. So the price action came up and it rejected. It fell again below it. At this point, we saw some sell-off. You see the top side becoming lower, and we see like some kind of a bottoming forming. So this is the price contraction, or what they call a triangle. The price action selling off against a horizontal range, horizontal level. Price action falling below it, coming up, retesting this area, and it rejecting again. At this point, we see another price contraction. So we got here the price contraction, breaking below it, retesting and forming another price contraction. At this point, we also see the candles becoming smaller on good volume. And at this point, I was clearly looking for a short. Because again, we're below the daily range, below the pre-market price action, below the moving averages. We see a lot of weakness, confirmed weakness, another price contraction, rejection, and more weakness. So I enter here. I had my stop loss, I believe, here. Entered for a short, and I got out at break even before the price action actually made the move. I got out because like I saw a big squeeze and the price action came up, and I'm trying to really minimize my losses in the setups that I lose, and to gain maximum by aggressive adding in the stocks that I in my winning trades. So I got out at more or less break even. The third trade today was Microsoft. We see a seriously daily range and a seriously fierce gap down. This one had no earnings, but probably responded to earnings of other big tech companies. Pre-market price action was also very weak. The opening range gets formed, and we're breaking below the opening range. At this point, I see a lot of selling pressure, selling pressure, selling pressure, selling pressure, selling pressure, selling pressure, selling pressure. And at a certain point, I also see the trend line break, bear bar, 3-bar play, and enter for a short for a good risk reward. I had my stop loss a little bit above the range. It was maybe a little bit doubtful. It is according to the rules of this specific trade book. It was a little bit doubtful because the price action actually made here a failed breakdown, and from this point basically only made higher lows. But still, it was according to the rules of my trade book, and this became a loser. Another interesting setup of today was IBM. IBM also had earnings. We see the daily range gap down. Pre-market price action was very weak. Also, the post-market was very weak, but that could also attract a lot of buyers, because suddenly where the last few weeks the price action could have been, the stock could have been bought for $190. Suddenly the market can buy it with a discount. So the market opens. Right before the market we see strength. The opening range getting formed. And I wasn't really bothered about this candle because it looked like such a big wick. I was not sure what happened here, but I didn't really care too much about it. There was a good signal bar, the candle before my entry. We broke the opening range and I wanted to get in, but I got a little bit of a bad fill. I think I wanted to trade. My trade was against the direction of the gap. I got stopped out here and I entered again. Again, we broke the pre-market high, which was the red dotted line. We made a new move up, a new H1 for another move up, and I entered here with a wide stop loss. Here we seem to break this move, and I added a small size and I got out. And actually in this setup, in this entry, I didn't lose because I had a wide stop loss and I went out at break even. So I caught a loser in this one, and I got small losses because my ads were relatively small. So in the end, it was a break even day for me, but the price action was pretty interesting, and I hope you enjoyed it. See you next time.